Hello everyone, welcome to today's tax cycle webinar. We're going to be chatting about T1 and T2 optimizations. My name is Sharka Hoyda. I'm a CPA, CGA, and tax analyst with Tax Cycle. Before we dive into the meat of the presentation, I just wanted to let you know that we are going to show some demos, and we recommend that you maximize your viewing window so that you can see everything I'm going to be showing you here clearly. The webinar is being recorded. You can rewatch it later by visiting our webinar recordings page on our website. We use polls to gauge your attendance, and you'll get your verified professional development credits for your 15 minutes today if you answer the one poll that we're going to give you and stay for the minimum amount of viewing time. And the certificate will come by email. So only have 15 minutes, so we're just going to quickly cover the option settings, the T1 optimization worksheet, and the T2 optimization worksheet. So let's hop out of here and hop into tax cycle. So off the top, you'll want to make sure that your options are set up for the preferences that you want to have for every new file that you're creating. And you do that by going into your options settings, and you can do that here, or I have a quick link up at the top of my browser or my tax cycle window here, but we'll go in from the side. And what you're looking for is you're going to scroll down to the module that you want to set your preferences in. You're going to go into the new file settings. And here, if you scroll down this list, you'll get down to where we have our optimization preferences. So if I stay on this tab, new file, then it will update all of my tax years with whatever preferences I set here. Or I can open this up and I can just set it for my 2022 year if I was using different settings before, and for this year I want to use a separate set of settings. I can do it individually here, but let's do it for the entire file. I'm going to just have to open up my options profile. And so currently I don't have anything set in my options here at the global level. So then we just need to choose which is our preference. And this all depends on how you like to work with your clients, what kind of clients you have, what makes sense for your practice. And typically we would want to either maximize the refund or reduce the tax payable to 0. And you can do that for both federal and provincial by selecting this one. Or you can reduce either the federal, provincial, whichever comes first, or just federal or just provincial. So let's make it be the maximum refund by default. And then you just go down here to hit apply. And then all my new files will start with this setup. And it will, if I open an existing file that doesn't match my options profile, it will give me a warning that the settings for the optimizations are different than what it was expecting. And you can choose to leave it or take the global setting that you have set up. There's also the minimum tax benefit transfer here for the T1032. So if the optimization is only for a $2 change, probably don't want to go through all the work of doing a T1032. So you set your threshold here for what you want that to be, and for the family tax credit as well here. So that's for T1. If we scroll down, it's the same process for T2. Down here we have our optimizations, and currently I have it turned off. And let's click maximum as our settings. And again, because I'm doing it from here from new file, it's going to update all the tax years with this setting that I've chosen. And then also T3 has similar preferences for new files, for optimizations as well, and an optimization worksheet there, which works in a similar fashion to what I'm going to show you today, but I'm not giving it specific coverage. So I'm going to apply those changes I made. I'm going to click OK to get out of there. And then let's dive into my sample T1 file. So right away you can see that I'm getting this message because my settings here in my local file are different than what I had just set up in my options profile. And if I'm okay with that, there might be a reason why this specific client might want, or it might make sense for a specific client to have a different type of optimization. You can set it here on the individual file and just clear that message so I can sign it off, or I can choose to accept the default optimizations. Or for some clients, no optimizations might make sense, at which point you can just select this and sign off that review message. So the way that this works is all of your key amounts where you have the option to, where you have some discretion in how you apply or what order you apply the relevant tax credits or income splitting to a particular tax file, will be shown all here on a single worksheet for you, with a few exceptions, but the majority of them are here. And that will allow you to quickly and efficiently review your tax client's tax file and look at what is going to be the best, most efficient tax outcome for your client, given the myriad of other variables that you need to take into account for tax planning, current year, next year, and their particular situation if it's changing. So this is where you can come to play with the tax calculations that TaxCycle will automatically do for you in the background. So the first one we have is the pension split, but I'm going to circle back to this after. So we're just going to go down here to the amounts that are available. So in my return sample here, I have some Quebec income. So I have the option to transfer some income between Wayne and Shauna for Quebec, and that's the similar and a pension split issue up here. So I'm just going to keep going. And so you can see right away that I have some RSP contributions for Wayne, and it's calculated a maximum deduction and an optimized deduction. These little arrows here show that there's a link. So if I double click on this field, it's going to take me to where that amount is getting calculated. And same with this optimization, there's a little link there. So double clicking on that field will open up where that amount is getting calculated for me. If I have a reason for the client to want to carry forward those RSP contributions, maybe they're in a low income tax bracket this year, and we know they're going to be in a much higher bracket next year, and we want to save that contribution, and we're allowed to carry forward up to $2,000 without any penalties or issues. So you could decide in this case, for example, to say, yeah, I want to claim a different amount. So I'll change that to yes. And maybe I want that to be 0 so that we can carry that forward to next year. And then I would just click off on this review message here to allow that calculation to remain as is. And then, of course, along the bottom, we have all of our monitors, which will give you kind of a quick update of how each of these individual changes, as we're making them, will impact the effective tax rate, whether or not they're getting a refund, and what the combined balance is for both Wayne and Wayne's spouse. These monitors, you can also add or remove whatever monitors make sense for you to keep track of as you're working through your file. Another way to look at this too is you can look at your T1 summary, which will give you a quick snapshot of how your changes are impacting the various things. Or if you like, you can look at your joint summary and you can see how those changes affect your coupled return. You can also drag this off. If you want to view it simultaneously while you're looking at your options, you can drag this by clicking Command. So Alt, and then if I click on this tab, I can drag it off and create a whole new window. It's kind of hard to show on a small monitor, but in theory, I could drag this over side by side or on a separate monitor, and then I can watch my family summary changing in real time as I'm working with my optimizations. So as we go through this, it's going to highlight anything that is relevant. So we have a section for non-capital losses, net capital losses, capital gains deductions, and in each of those cases, it's going to give me the same information. And then you can also see any unused balance that's available, in this case, to carry forward. Going down a bit further, we have some family-related optimizations. So highly recommend where you have a coupled return, where you have a couple, a spouse, a common law couple, that you put them together in the same return if at all possible and prepare their returns together, because that's how you're going to get the best optimizations for that married or common law couple. And especially as it gets more complicated with dependents and other income types, this becomes increasingly important. As well, some of the tax credits are dependent on whether or not we're looking at combined income or individual income as well. So here I do have some donations in my file, and we have the option here. So it works exactly the same way. I might have a reason not to claim these donations in the current year, and I might want to carry them forward to the next year for whatever reason. So I also have that option here to claim a different amount, exactly the same way as up top. And then we have the home buyer's credit and tuition. And so the other important one here is medical expenses. So in this case, often we want to claim the medical expenses on the lower income spouse. And the reason we do that is because of the income threshold test that we have to calculate in order to be able to claim the medical expenses. And then we have some discretion in terms of the period of time, as long as it ends in the tax year for which we can claim those medical expenses. And you can do that. You can look at here what tax cycle is saying is the optimum result. So in this case, I can choose to claim the highest period of medical expenses, which makes sense for this couple, and it improves their tax situation a little more efficiently at the bottom. And it just basically, if you're entering all of the information on your medical expense sheet here and you're making sure that you're careful with your dates, then our optimization will work really well here for you so that you can choose the best scenario for your clients. And then the Canada Workers Benefit, if it's applicable, if you have some low-income clients where they can take advantage of that, there's an optimization there. And then we have some provincial optimizations as well. So I'm just going to hop up to the top of the sheet again here, so where we have our elected split pension amount. So if you have some pensioners and there's an opportunity to save some money, this is a really handy little section of the worksheet. It will automatically calculate for you who is the transferee and who is the pensioner, and it will automatically optimize the election for you if it detects that there's pension income that's applicable. And it will give you a combined tax savings amount here on this line. So you can see the advantage of doing the split. When we do this, of course, we have to send out the T1032 so that both spouses can sign off that they've agreed to the splitting of the pension. But if you did, for whatever reason, want to claim a different amount, or you wanted to play with the optimization, because again, a client situation can vary greatly, and we know that there's all kinds of weird and wonderful things that come up. So you might want to claim a different amount, and you can do that here by just selecting yes. And you can play with the amount that you want to put in here for the split. Like maybe I only want to split $20,000 for some reason. I can put that in here, and we can immediately see the difference in the tax calculations when I change the split. So that's T1. I'm going to hop out of here and quickly review T2. T2 works in exactly the same way. There are fewer optimization items here, but same deal here. It's going to remind me that I'm not using my default settings. And then we're going to go down. And so it's going to highlight all of the sections where we do have some discretion, and CCA being one of them. So I can claim a different amount here. I can claim it also on the S8 schedule at the bottom. There's a linked box here, which does exactly the same thing to claim a different amount. But the nice thing about doing it here is that then I can also see how tax cycle, how that change is impacting how it's going to accept these other or calculate these other deductions as well that I've got set up in my file. So if I say yes to claim a different amount, and maybe I only want to take 40,000 here, it should, oh, maybe I need less. All right, so there is a scenario where, let's make that 0, where it should claim a different amount here. And sorry, I have not put that in my notes, but in any event, where it's applicable, it will change the optimized amount here to claim whatever portion is applicable. And then we have summary sheets that you can look at. There's the 5-year summaries where you can keep track, or there's the T2 the T2 summary similar to the T1 summary as well that you can look at to see how your changes are going to impact the overall amounts on the return. And if you're planning for next year, we do have this tax constants worksheet where you can input any of the relevant legislated changes that are proposed but maybe not enacted. So you can take a look here by playing with this worksheet to see what the potential impacts of those changes might have for your clients in the next tax year. So with that, I'm going to just stop there. There is also a similar worksheet in the T3. I don't have time to show it to you here today, but it works in exactly the same way. If you have any questions, please reach out to our support team, info@taxcycle.com. And thank you so much for joining me here today. Have a great rest of your tax season.